All right, so the highlight for the 5th of July after the 4th, came back to trade it just because of the unemployment report that was released an hour before where I'm going to start this highlight. An hour before, we had a strong non-farm payroll number, 224,000 versus 160, which is technically bullish for the economy, bullish for stocks. However, the stock market, the bond market, the dollar, gold, a lot of ancillary markets that trade around interest rates are like, well, this is the last unemployment report before the next FOMC meeting. They might go 50 with a strong report. They might not do anything. Markets go down if the Fed goes from dovish to neutral, right? If there's less of a chance to cut rates, bond prices go down, gold prices go down, dollar index, native currency to central bank goes up, and stock indexes would typically go down, especially knowing that the driver of a lot of this upside in stocks and U.S. stocks, namely, have been because of a dovish Fed over the last 3 or 4 weeks. So the chance of going a quarter, maybe a half in about a month, come off, that bullishness priced in starts to turn to bearishness. So after the open, which is this yellow line in here, so there was some quick buying coming in with these edge zones, these hash marks that you'll see at 85 3/4, and a couple more that went away but popped in 86 half or 86 quarter. So they were trying to defend this after the open. We talked about how this market could try to play it maybe back down to 82, which was the low after the number, and retest that low after the open. Some value area lows down there that Mark had come in and talked about in his profile preview. So let me play it and show you the hook and the opportunity to say this buyer is getting laughed at. It happened quick. Actually, let me see if I could share computer sound. You could also hear it on the audio. Happened so quick, you couldn't. This was the hook. It got green really fast and came off. And that was the moment where hold on, Trump is talking while I'm doing our recording here, just to see what happens. Comment. There was an audio 86 3/4, really quick, so quick that on this replay 2 times doesn't show it, but 86 3/4 went. Wait, what did he say? I'm just reading what he said. Nothing that's market moving. So 86 3/4 go bid or buyers come in as far as these edge zones read. I hear it on the audio. But Price looks at this guy as if he wet his pants and everybody's now laughing at him. That's the best analogy or metaphor to use. When buying comes in and it doesn't go up, it's like you wet your pants on the playground and now everybody's laughing at you. When buyers are getting laughed at, the downside is probably the right side. So if you're bearish, that's your win moment. And I'll play it. And that was the whole sequence after the open. It's about 2 or 3 minutes after the open. And it's kind of an effortless move down. And you don't always get them this effortless, but there are times if you're leaning towards the short side for XYZ, you're looking for buying to come in and it cannot go up. The other thing that you had in this sequence is buying was coming in here if you were reading it, and they were getting it to go up. So below this area, which also happened to be the open, you really get longs who are trying to play the open, and after the open to say, holy, you know what, their eyes get like grapefruits and the downside's the right side. And there's no coincidence that it comes back up in here. You could see it go green and red and uses it as overhead resistance. Again, these are footprints, but they're rotation P&F. So it comes back in here and curls back over and goes down, because that's where a lot of people got stuck long, in this area right in here. Comes back to where they got stuck and returns lower. These concepts of reading order flow and trying to find out where people get stuck long or stuck short, doesn't matter if it's the price of a future, Forex, or an individual stock. Buyers and sellers matter when they get out of whack and when they get stuck and everybody races to the exits. In order for price to go down, you want people who were long to all chase each other, running and rushing to the exits. People who are long, running to the exits, are sellers. When you get a lot of sellers climbing over each other to get out, price goes down, whether it's the price of a shirt at Target, Walmart, car, house, doesn't matter.